How to protect your $500,000 401k from market crashes with a Gold IRA. A sudden market crash can wipe out years of savings, especially when your retirement is heavily tied to stocks and bonds. If you want to safeguard your nest egg, learning how to protect your $500,000 401k from market crashes with a Gold IRA is a smart first step. Gold has a long history of holding value during economic turmoil, making it a powerful hedge against volatility. Get free Gold IRA guide and learn how to diversify your retirement with gold. Click the link below in the description to get it. Why your 401k needs extra protection. Traditional 401ks rely on equities, bonds, and mutual funds, all of which can fall sharply during a crash. If most of your $500,000 is exposed to market swings, a downturn could significantly reduce your retirement balance. Gold, however, often rises or holds steady during uncertainty. Adding it to your retirement strategy can create balance and reduce overall risk. Benefits of a Gold IRA. 1. Wealth protection. Gold retains value during instability. 2. Inflation hedge. Gold typically climbs as inflation rises. 3. Diversification. Helps reduce reliance on the stock market. 4. Crisis security. Seen as a safe haven in recessions and geopolitical tension. How to protect your $500,000 401k with a Gold IRA. 1. Review your current portfolio. Identify how much of your 401k is in stocks, bonds, or cash. Too much exposure to equities increases your crash risk. 2. Choose your gold allocation. Experts recommend 10% to 30% in precious metals depending on risk tolerance. Conservative, 10%, $50,000. Moderate, 20%, $100,000. Defensive, 30%, $150,000. 3. Open a self-directed IRA. This type of IRA allows you to hold IRS-approved physical gold. 4. Select a trusted custodian. Look for transparent fees, strong reviews, and secure IRS-approved storage. 5. Roll over part of your 401k. A proper rollover is tax-free and penalty-free. Your custodian will help purchase physical gold stored in a secure facility. 6. Rebalance as needed. Review your account regularly and adjust based on market trends and retirement goals. Avoid these common mistakes. 1. Not using an IRS-approved custodian. 2. Buying non-approved metals. 3. Ignoring fees and storage costs. 4. Over-allocating to gold and limiting growth. Market crashes are unpredictable, but preparation isn't. By adding gold to your retirement strategy, you create stability and long-term protection for your $500,000 401k. A Gold IRA offers diversification, inflation defense, and peace of mind, helping you build a retirement that can withstand economic storms. Do you want to learn about how to secure your retirement with gold investment? Download your free Gold IRA guide now. Click the link below in the description to get it. Like and subscribe for more. Thanks for watching.